Are tax liens a safe investment? In this video, I'm going to walk you step by step what a tax lien certificate is, and I'll let you be the judge of that. What we're going to accomplish in this video is we're going to show you how they originated, tax lien certificates on properties, okay, why they're available, and why they're actually a triple win. Win for the property owner, that's right, win for the county, and win for the investor, you. Now, I'm going to let you determine all of that, but all of those things. And let me tell you something. All of that information, by the time we're done with this, I'm going to show you how you and your family can level up and use this newfound knowledge to acquire your first investments paying 16, 18, even as high as 25% with virtually no risk, because everything will be backed up by the government. So stick around for that. I'll show you precisely how to make that happen. Let's talk about the risk factors with tax lien certificates. There's risk in walking across the street if you don't look both ways, right? If anybody's ever been to England or London specifically, you're walking down the sidewalks, for us Americans, they literally have painted on the ground with an arrow telling you which way to look, because the cars are coming from the opposite direction. And if you look to your left, you might get hit by someone coming from the right, okay? Anyways, it's kind of funny that way. So as simple as walking across the street is, it can be risky. As simple as buying tax lien certificates can be, there are a lot of risk if you don't know what you're doing. So first of all, let's go back up to what are tax lien certificates? When I first heard about tax lien certificates, we're back in the early 90s. And what it is, and matter of fact, I think it was one of the major periodicals, Barron's or Wall Street Journal, I can't remember, called this one of the best kept secrets on investing in the United States at that point. This is where a lot of banks have put their money. Bank of America, Wells Fargo, Citicorp, some of your larger insurance conglomerates like Northwestern, New York Life, where I was working at the time, back in 1994, had been investing in tax liens for over 130 years. So why would they call this one of the best kept secrets in the United States? So there's a couple of different reasons. Okay, you might want to write this down. First of all, tax lien certificates offer you interest rates of 16%, 18%, even as high as 36% return on your money with virtually no risk, because at all times your money is backed up and mandated by state law. That's right. See, think of it like this. Let's compare apples to apples. Let's say when you go to a bank and you put your money in the bank, they're paying, 4 or 5% right now, maybe, because the interest rates are higher. But you're locked into that for, let's say, 1 year. Nothing can or will affect your yield or your principal. The same thing happens with tax liens. The only difference is, instead of 5%, you're locked in at 16%. You're locked in at 18%. You're locked in at 25, 36%, and nothing can or will affect your yield or your principal. When you put your money in the bank, it's insured by the FDIC up to $250,000 per account. The only difference is with tax lien certificates, there is no limit. I don't care if you put $10, $10,000, $10 million, every single dime you put in there is backed up and mandated by state law. The interest rate is written there and the dollar amount doesn't matter. Okay. And for those of you that like real estate, you stick around, I'll show you using this strategy, a very loophole at the very end there on how you can acquire valuable real estate right in your backyard or anywhere in the country for that matter for 4 to 10% of its fair market value. Thinking about buying a, say, $300,000 property and only paying $8,000 for it, $15,000 for it, and owning it free and clear with no liens and encumbrances. Okay, I know it sounds, pretty natural at this point to say to yourself, this sounds pretty good, Sean. This sounds a little too good to be what? True. And now I'm going to walk you through how this works so you can determine if this is something you want to level up for you and your family. I'm just going to lay it all out there. Okay, are there risks involved? You're darn right there is, and we're going to cover all those in this video. So first of all, let's talk about what a tax lien certificate is. Tax lien certificate is a first position lien on a property due to delinquent property taxes. See, in over 2,000 jurisdictions across the United States, Once a property owner becomes 1 year delinquent on the property taxes, the county is going to conduct a sale. They're authorized by law. It's literally, you got to do this 1 year. Okay. And they say, okay, they've been late. We're going to offer them up for sale. So I can come in there and say, hey, I want to buy this tax lien certificate. And they say, okay, thank you very much. And I buy the tax lien. That is a legal document that goes on file down at the county courthouse. Okay. That's going to bear an interest rate. Like I said, 16, 18, 25, 36%. We'll use 18% just for this example. I don't have to do anything. I don't own the property. I'm not buying somebody's house. In fact, the property owner doesn't even know this is probably happening. I'm dealing with the county. See, the county is my workhorse. They give me that certificate. It goes on file down at the county courthouse. When the property owner comes down to satisfy their delinquent taxes, okay, they're going to go to the county. It's kind of like a speeding ticket. So if you get a speeding ticket, you can't go, I'm going to pay half now and the rest later, or a parking ticket or something like that. No. So when you have delinquent property taxes, you go down there and say, okay, how much do I owe? You give them the money. The county collects it and they go, oh, wait a second. Sean has the lien on this property, and by law, they have to issue me a check within 5 to 10 business days for my full investment, and in this case, 18%. Am I happy? Darn right I'm happy. Getting 18% of my money. I mean, think about that. That is 4 times higher than a bank is willing to pay right now. I call that pretty good. Now, you're thinking, that's great, but what if they don't pay? Okay, that's a great question. The counties give what they call a grace period. Actually, the legal term is called a redemption period. That redemption period can be anywhere from 4 months on the low side up to 4 years on the high side. Again, depending on the municipality. In this case, we'll use 2 years. So in other words, this person has 2 years to pay off the property taxes plus the prevailing interest rate. If they don't come in within that 2 year minimum time, it's still no big deal. All I do is call my workhorse. That's the county. Property owners fail to pay off the property taxes. I'm the lien holder of record, and I would like to go ahead and exercise my right to foreclose on the property. Okay? So what happens is this. They're going to send out notifications to everybody. Let's say it's about 60 days. So 60 days will come and 60 days will go. If nobody comes in to satisfy those delinquent taxes, plus the interest rate, within that pre-prescribed amount of time, make no mistake about it, I get the property. So in other words, let's say for a couple of years back taxes, I will own, say, a $300,000 piece of property, eliminating all liens and encumbrances, including a mortgage. And I will own it free and clear. Okay, would you call that a good real estate deal? I call that a great real estate deal. I call that a phenomenal real estate deal, but let's get real. Who's going to let a $300,000 property disappear for a couple of years back taxes? Probably not. But what you're doing is you're buying the property owner time and giving the county the money that they need really badly for schools, roads, fire department, police departments, et cetera, et cetera. Okay? But make no mistake about it. If they don't come in, I get the property. Some way, somehow, the property owner will figure out how to come in there and do that. But if they don't, who cares? Boo-hoo. So your downside is 16, 18, 25%. Your upside is free and clear property all day long. Now, I know what you're thinking. Okay, you're thinking, that's really good. But what about the bank? Okay, what about the bank? The banks aren't afraid of these. They're not nervous about these. They're like, I hope there's not a lien on this property. If you read your mortgage carefully, if you fail to pay property taxes and jeopardize the bank's position, and they have to come in and satisfy a delinquent property taxes because they know they can get wiped out, they will call your loan due. So probably what's going to happen is when I go into foreclosure, county sends out the notification. The bank will obviously be one of those. And they'll go, whoa, what's going on here? The first person they're probably going to call is a property owner. Property owner, hey, what's going on? I'm on vacation. I didn't know about it. I don't have the money. Whatever the case is, what do you think the mortgage company is going to do to protect a multi-$100,000 loan against this property? Yeah, they're going to pay it. The only thing they can pay is the back taxes plus the interest rate to protect their situation. County gets the money. They see that you and I are lien holder record, and we get our money. No fuss, no muss. Everybody wins. I want to be very clear. If the bank doesn't come in and satisfy this delinquent tax, you will get the property free and clear. Now, I get clients all the time that say, Sean, how do I get the property every time? And I'll show you how to do that. And some go, I don't want to deal with the property. I just want to be redeemed every single time with that big, fat, juicy check. And I'll show you how to do that every single time, okay? And you're in luck. Right now, I've got a brand new course, okay, that walks you step by step. It shows you where to find the auctions, what the interest rate is, what letters you need to send out, how do you get prepared for the auction, what kind of properties you want to stay away from, what kind of properties you're attracted to, everything. Just go to higginsmethod.com. It's a link. It's my gift to you. This is a free course. By the time you're done, you'll be able to go out and buy your first tax lien certificate, and you'll be on the way to making 18%. This is Saen Higgins saying God bless and good luck. We'll see you on the other side.